what you call passage of time. Passage of time. Over time, for example, if we buy an asset today, for example, we buy a car today. If you look at the value of the car, for example, after maybe a period of years, the value is not the same. So the second reason would be passage of time. But then we have what we call, the next one we call obsolescence. Obsolescence, and we say that on obsolescence, we basically say that obsolescence is a new invention, a new invention, or permanent change, change has occurred, permanent change in demand, what we call permanent change in demand, may render the asset, what we call the asset, useless. So that is what we call obsolete. When new invention come in or permanent change in demand, that asset may no longer be desired altogether. Then the next, we can have what we call accidents. Accidents can also lead to loss of value. Then lastly, what we call fall in the market prices, So what we call the fall in market prices, are we together? Fall in the market prices. We say that depreciation is the loss of value of fixed asset. So due to passage of time. A very common question you can be asked, objectives, what you call objectives of carrying out depreciation. What is the objectives of carrying out depreciation? What is basically the objectives of providing or carrying out depreciation? Why do you think we need to carry maybe 2 marks in an exam? What are the objectives of carrying out depreciation? What would be the objectives of carrying out depreciation? Who can? Yes, you can.
Can I say?
What would be the objective? Yes, try.
To determine the price of that asset.
To ascertain what? To determine?
The price of that asset at the given period.
Yes. Objectives of carrying out depreciation. You see, without getting depreciation, you may not have the true value of an asset together. You may probably not have the true value of an asset. So we can talk about ascertaining, what you call number 1, ascertaining the true value, what you call ascertaining the true value. One of the objectives of carrying out depreciation is basically to ascertain the true value of an asset. Sometimes people will say that this asset is 50,000, but upon looking at depreciation, you find that it's way lower. Apart from that, ascertaining the true value of an asset, what would be the objective of depreciation? Objective of carrying out depreciation?
Determine the lifespan of that asset.
Determine the lifespan.
Yes. An asset question.
Yes, we can talk about calculating. What you call calculating? Correct amount of profit or loss. Correct amount of profit or loss. So if you don't know the depreciation, sometimes if you don't include depreciation, you may not be having the true value of profit and loss. Then we can talk about the next is to compute. We can have to compute what you call the cost of production, the cost of production. To compute the cost of production. To compute the cost of production. To compute the cost of production. We can also talk about to comply with legal provisions. To comply with legal provisions. Legal provisions. To comply with legal provisions. Then to avail the tax benefit. We can also have the last one to avail the tax benefit. To avail the tax benefits altogether. To avail the tax benefit. To make provision. We can have to make provision for worn out. To make provision for worn out. To make the provision for worn out assets. Now, how you can replace those assets that are basically worn out. So then we proceed to very critical areas. That is methods of determination, methods of determining depreciation. Which are the methods of determining depreciation? Methods that we basically use to determine depreciation. What are these methods that we use to determine depreciation? Methods that we use to determine depreciation.
Straight line basis method.
Straight line method. Another one.
Reducing balance method.
Reducing balance method. Which methods do we know? The most common that we basically use in questions will be the straight line method and reducing balance. Apart from that, what do we have? We can have what we call the sum of digit method. Then you can have what you call revaluation, revaluation method. So I want us to start with the first one. That we call straight line method. How do you go about the straight line method? The straight line method. Straight line method. Somebody to tell us, how would you go about the straight line method? How would you go about the straight line method? How would you go about the straight? So what do you know about the straight line method?
Straight line method is a way of depreciating whereby a certain, as in an asset is exposed to depreciate with a constant amount of depreciation.
With a constant, we just say that the loss of value is accrued evenly over an entire useful life of an asset altogether. Basically, when you talk about the straight line method, we know basically that the loss of value of an asset is accrued evenly over an entire useful life of an asset. Let's say, for example, we have 5 years. If we have 5 years, one of the things that will happen if you have 5 years, you'll find that if an asset is probably maybe 10,000, we can say that it's depreciating on a straight line for 20 at the rate of 20%, implying that for 5 years it will be losing value, a value of 2,000 until 5 years altogether. until 5 years. That is what we call accrued evenly over an entire useful life of an asset. Apart from that, what do you say on that? Of an entire life of an asset. So we say the loss of value is accrued evenly over an entire life of an asset. So the loss of value is accrued evenly over an entire useful life of an asset. How do you determine the loss of value is accrued evenly over an entire life of an entire useful life of an asset? So how do you calculate depreciation? How do you go about it? We'll have what you call cost minus what you call the salvage, scrap, so salvage value over what you call the useful life of an asset. Useful life of an asset. Copy that. Then you cost minus scrap stroke salvage value. Then you divide by the useful life of an asset. Copy that. Copy that. We copy that. Or you can say, or depreciation, most of the cases say depreciation. Depreciation is equal to cost times the rate of depreciation. So example 1, we can have example 1. Example 1. Are we there on example 1? Are we there on example 1? If you're there, we'll respond with yes. So we can put down example 1. Example 1, are we there? Are we there? We respond if you're there on example 1.
Yes.
Are we there on example 1? So we can say the cost of an asset, is 1 million. The cost of an asset is 1 million. The cost of an asset is 1 million. After 5 years of use, after a useful life of 5 years, after a useful life of 5 years, the value of an asset is 100,000. After a useful life of 5 years, the value of an asset is 100,000. And say determine the depreciation of an asset. Determine the depreciation of an asset. Determine the depreciation of an asset. determine the depreciation of an asset? Can you determine for me the depreciation of an asset? Determine the depreciation of an asset. How do you get depreciation for that? Using the first formula. What would be the depreciation of an asset? So being told that the asset value is $1 million. After useful life of 5 years, the value basically becomes 100,000, and you're told to determine the depreciation. Determine the depreciation of an asset. So what is the depreciation? What is the depreciation of an asset? So say depreciation would be, what is the cost? 1 million. We have 1 million minus the scrap value. What is the scrap value or salvage value? How much is it?
900,000.
Then over the useful life. What is the useful life? The useful life?
Yes.
5 years. So say 5 years. So what is the difference between $1 million? That would be 900,000. Then you divide by 5. What is depreciation per year? Per year. Who has a calculator? Depreciation. Depreciation after 5 years. Every year for 5 years. How many times does 5 goes to 900,000? What is depreciation per year?
180,000.
180,000? 100. Say 100. 180,000. So the figure, this asset will be depreciating at the rate of 180,000 for 5 years altogether. So scrap value is the value of an asset after the useful life altogether. Or else, for example, you can be given a question, just note this down. Calculate the depreciation of an asset. Just put down the value of an asset, the cost of an asset. The cost of an asset is shillings 200,000. Is shillings 200,000. The value of an asset is shillings 200,000. And the rate of depreciation is 20%. And the rate of depreciation is 20%. Calculate depreciation based on a straight line method. Calculate depreciation based on a straight line method. Calculate depreciation based on a straight line method. You're told that the cost of an asset is 200,000 and the rate of depreciation you're saying that the rate of depreciation is 20%. Calculate the depreciation on a straight line. How do you go about it? How do you go about that? So using straight line method, we'll just say cost times the rate of depreciation. Very common, cost times the rate of depreciation. What is the cost? Cost ngapi?
200,000.
200,000. So 200,000 times the rate. What have we said the rate?
20%.
20%. So what is 20% of that?
40,000.
40,000. And I want to ask a question. Though we have not been given the useful life, how long will this asset take to depreciate? How long will that asset take to depreciate?
5 years.
5 years. How do you get the 5 years? That would be basically depreciation per year. That would be 200,000 over 40,000. We know that for 5 years. But then we know that when you're using the straight line method, and we know that yearly, depending on the useful life, the depreciation should be the same altogether. Then we can go to reducing balance, what you call reducing balance method. How do you go about reducing balance method? Reducing balance method. How would you go about reducing balance method? What is a reducing balance method? What is reducing balance? We say this method. You're saying something? Proceed. This method provides a declining depreciation every year. So it provides a declining depreciation every year. So every year there's a declining depreciation. Then we say it is based on the net, what we call the net book value. It is based on the net book value of an asset. And the question is, what is the net book value? Net book value of an asset. When you say net book value of an asset, what is the net book value of an asset? Net book value is, when you say net book value of an asset, what do you mean? What do we mean by net book value of an asset? So net book value will be cost minus accumulated depreciation. Minus accumulated depreciation. That is the net book value. Then you have example. So the key thing you need to understand that the rate of the provide declining depreciation every year. If you had a depreciation, for example, of 4,000 in the first year, you'll find maybe there. The second is 3. The third is 2, 1. That is what you call declining. So I can give you this question. You note down. So put this down. Put this down. Illustration. A business acquired an asset. Note down, a business acquired an asset in 2020. A business acquired an asset in 2020. The business acquired an asset in 2020. The business acquired an asset in 2020 at a cost of 5 million. At a cost of 5 million. A business, we say a business acquired an asset at a cost of 5 million, at a cost of 5 million in 2020. At a cost of 5 million in 2020. Then you say the asset is depreciated. You can continue. We say that the asset is depreciated. On a reducing balance, the asset is depreciated on a reducing balance at the rate of 20% per annum. The asset is depreciated. The asset is depreciated. The asset is depreciated at the rate of 20% per annum. Then you say calculate depreciation. Calculate depreciation for the year calculate depreciation for the year. Calculate depreciation for the year ended. Calculate depreciation for the year ended. For the year, we have 2020, 2021, 2022, 2023. Then we have 2024 and 2025. So calculate depreciation for these years based on reducing balance altogether. So in order for us to do that, we can say year, we can have, for those years, we can have year on this side. We can have year. So we can have the next column, cost to net book value. Depreciation, we have depreciation, depreciation rate. We can have depreciation amount. We can have depreciation amount, depreciation amount, and then we have year net book value. So start with year one. Year one, that is year 2020. Year 2020. So what is the cost of net book value in the year 2020? What is the cost stock in the year 2020?
5 million.
You're saying?
5 million.
5 million. So what is the rate of depreciation? That is 20%. 20%. So what is 20% of 5 million? (20% of 5 million? Cost
1
times
million.
tax. That is 1 million.
1 million.
1 million. And say that what is the net book value? Cost minus accumulated depreciation. So what is the net book value as at the end of 2020?
4 million.
That is 4 million. That should be 4 million. When you get to 2021, so what is now the cost of net book value? Remember, we do what on the second year now we use the net book value. So 2021, what will be the net book value? The value that you're picking, it is 4 million.
4 million.
The rate is still 20%. What is 20% of that? What is 20% of that?
800,000.
800,000. What is now the net book value? The net book value would be, give me the net value. You can use 5 million and less this, or you can use 4. 4 then you
3.2.
less. How much?
3.2.
3.2 million. Then you can have the next, which is 2022. What is now the net book value for 2022? That's what you have. The rate is still 20%. What is the 20%?
640,000.
640,000.
640,000.
So what is the net book value when you less that? So when you less that, what do you get? When you less that, what do you get?
256,000. 2 million. 2.65. 2.56. I mean.
6,000. Is that what you're saying? Can you confirm that?
Yes, sir.
Is it 256? I don't think so. I don't think so. I think you are, when you less this from that, I don't think so. Not 250, 656. Not 656. Less that properly. Less that properly. Less that property. Not 256, 656. That's why I have an issue.
2,560,000.
2,560,000, that should have been the value. Then the year 2023. The year 2023, what is the net book value? The year 2023, what should be the net book value? That is 2,560,000. The rate is 20%. What is 20% of that as the rate? What is 20% of that as the rate? 20% of that? 20% of that?
512,000.
512. What is the net book value when you have that? What is the net book value? You less that the net book value minus that depreciation for that year. Or you can less it from 5 million, then you less the 3. What do you have? 2,560,000 minus 512. What do you have?
2,048,000.
2,048,000. 2,048,000. Then we go to the year 2024. So that is the net book value is 2,048,000. We get the rate is 20%. So what is 20%? 20% of 20%. What is 20% of that? of that. 20% of 2,048,000.
409,600.
409,600. So what is the net book value? Give me that.
1,638,400.
1,638,400. 400. Then we have our last year. That is 2025. The net book value is that 38,400. The rate is 20%. Give that. The rate is 20%.
$327,680.
327, 680. So what is the net book value of that?
$1,310,720.
1,310,720.
720.
1,310,720. Perfect. Is there anybody with a question? Is there anybody with a question on that? So I want us to move to the sum of digit, what you call the sum of digit method. Sum of digit method. So you can say this. ln acquired, put it down, ln acquired. ln limited acquired. ln limited acquired. LN Limited acquired. We say LN Limited acquired an asset. LN Limited acquired an asset at a cost of 10 million. LN Limited acquired an asset at the cost of 10 million. 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 On 1st, we say on 1st January 2020. So LN Limited acquired an asset at the cost of 10 million on 1st of January 2020. The asset is estimated. We say the asset is estimated. We say is estimated. The asset is estimated to have what we call a useful life of 5 years. The asset is estimated to have a useful life of 5 years. With a residual is the same as a residual of 3 million. The residual of 3 million at the end of its useful life. At the end of its useful life. You say calculate depreciation using the sum of digits using the sum of digits, sum of digit method. Using the sum of digit method. How do you go about it? We can also create on this at the end. We wrap it here. Can I wrap this? Can I wrap that? Can I wrap this if you've copied that? I can wrap that. So we also have years. We have reciprocal, what you call reciprocal. Then you have amount. Then you have depreciation. So I want us to have we have year 1, year 2, that is 2020. Year 1 is 2020. Year 2 is 2021. Year 3 is 2022. Year 4 is basically 2020. 2024, 2021, 2023. Then we have year 5, that is 2024. Together. Are we together on that? Tuko pamoja. If you're together, we respond with a yes. Are we together?
Yes.
So we get the sum of digits. We say that year 1, year 2, year 3, year 4, year 5. If you add this to get the sum, how much is the sum? What is the sum for that? The sum will be 15. 15. Are we together? So the sum of digits will be 15. Tuko pamoja. So year 1, year 2, year 3, the sum will be, if you add that, that will be 15. 15 altogether. Are we together on that?
Excuse me.
Yes.
In the previous calculation,
Yes.
the reducing balance method, we also had a duration of 5 years.
Yes.
So we calculated from 2020 to 2025. This is not 6 years.
That one was for 6 years. I think we passed. It means that we passed. That we did for 6 years. That one we did for 6 years. For that was 6 years. Is that okay? For that we did. Essentially, when you're having a reducing balance, sometimes you may never get the end of, it may never even, it can take even more than 5 years altogether. Because even if you have 2024 as the last year, we're using 2024 as the last year, we still had a net book value. Are we together? Tuko pamoja. When you're reducing the balance, it takes long to clear that altogether. It can go over and over. Because even at 5 years, we still had a net book value for that asset. Is that clear? Are we together? Respond if that is clear.
Yes, yes.
Yes.
So then we go to the sum of digits method. So the sum for those digits, if you add those year 1 to year 5, the sum of digits is what? Is 15. Are you able to see 15? 1 plus 2 plus 3 plus 4 plus 5, that should be 15. 15 altogether. Are we together?
Yes.
Perfect. So we're saying reciprocal. We're saying that for the first year, instead of using 1, we are going to use 5 over 15. That is year 1, the reciprocal. 5 over 15 over 15. What is the amount? Amount is how much? Amount is how much? Amount in ngapi? It's 10 million. So we can round it probably to 10,000, 10 million. And remember, we have what? Residual, or the scrap value, minus 3. So when you multiply 5 over, that will be 5 over 15, which is the reciprocal from that. 5 over 15 times 7,000. What is the depreciation for year 1? Depreciation for year 1. Depreciation for year 1. Are we together? So this is the scrap value, the value that we'll have at the end of 5 years. So 5 over the reciprocal, 5 over 15 times 7,000. What is that depreciation for year 1? Give me that. Give me that depreciation for year 1. What do we have for year 1?
It's 2,333,000.
333. We just, I'll say round it to thousands. When you round it to 1,000, that will have what? 2,333,000. You see, this will round it to 1,000. Yes. So year 2, now the reciprocal, instead of having this, that will form over 15. Again, 4 over 15. 4 over 15. We multiply by 10 minus 3 times that. What do we have? What do you have? What do you have? So this was 3.3 recurring. So year 2, what do you have? That is now 4 over 15, 27,000. What is depreciation using the sum of digit method? Sum of digit method. What do you have? The sum of digit method. The sum of digit method, what do you have? What do you have? Give me that. Give me that.
1,866 if you round it off to 1,000.
Yes. Point what?
Point
67.
7.
Yes,
Yeah.
0.7. Then the third year, that will be 3, the reciprocal 3 over the times, we know that 10 minus the residual, which is 3. What is, so that is to say, 3 over 15 times 7,000. So what do you have? Rounding it to thousands. So the third year, how much is that? That is 3 over 15 times 7. What do you have? What do you have for that? What do you have for that? Give me that.
It's 1,400.
1,400. Perfect. So year 2, year 4, that would be that times 10,000. Remember, we round it to 1,000. So what do you have? That should be 2 over 15 times 7,000.
933.
933. 933.33. So that is the position. Then lastly, or the last year, that is 10 minus 3,000. What do you have for that?
466.67.
466. 466.67. That is on the reducing, on the sum of digit method. That is basically on the sum of digit method. So that is how we use the sum of digit method. We can have a small break, come back, and I want to discuss a few things on prepayments, how we treat prepayments, how we treat accruals, and then, but I want to talk about prepayments and accrual. So we can have a small break, then we come back. So for example, the sum of digit. The other method of finding this sum of digit, the value that we got for the sum of digit, which is Sn, we'll say n into bracket plus 1 over 2. What do you get? N is the number of years. Sn is the sum of digit. Sum of digit to be. Then n is number. N is equals to number. We call it number of years. So n is basically the number of years altogether. Are we there, team? If you're there, we respond with a yes. So how do I get the 15, which is the sum of digit? The sum of digit of said, which is Sn, is basically equals to n into bracket n plus 1 over 2. And n, we say n is equals to the number of years. N is equals to the number of years. N is equals to the number of years. Tuko pamoja. Are we together? So if I was looking for the sum of digit, I'll say n is 5 into bracket 5 plus 1, then I have over 2. So that will be 5 times 6 over 2. What am I getting as the sum of digits? Sum should be, are you having that as 15?
Yes.
Do you have, that should be 15? 15. But you can as well sum them. If they say 5 years, we'll say 1 plus 2 plus 3 plus 4 plus that plus 5. That should give us 15. Or you can use the formula to say, get the sum of the digits together. I want us to proceed to disposal. I want us to proceed to disposal. To what you call disposal. So what is disposal when you say disposal? When you say disposal, what do you mean by disposal? What do we mean by disposal? What do we mean by disposal? Disposal. What is disposal when you say disposal?
It's either not using, rendering something not useful, or rather selling the item, an asset. I mean,
Selling?
selling an item, an asset, or rendering it not useful.
Your name? What's your name?
Musa.
Musa. Okay. So selling of an asset. When we disposal is the same as selling of an asset altogether. When you talk about disposal, we say that a farm, basically when you say a farm we say may dispose of its asset, may dispose of its assets in the following 3 ways. What are those ways that a farm may sell or dispose an asset? The ways that a farm might basically dispose an asset. So one of it is selling of an asset, together. Are we together? A farm can dispose an asset by selling. What is the other method that a farm can dispose an asset?
Writing it off.
Writing it off. We can write it off. Writing it off. And lastly, how can a farm? We can talk about scrapped off. What you call scrapped off. You can decide to scrap off. Scrapped, asset is scrapped or not used anymore. Not used anymore. So whenever we're selling, let's say for example, we pick selling of an asset. What happens when you sell an asset? What are the likely scenarios that are likely to occur when you sell an asset, when you dispose of an asset?
You can get profit or incur losses.
You can make profit or you can incur losses. That's why what you call what? Disposal loss, or you can have a disposal gain altogether. Whenever we talk about disposal loss altogether, what does it mean when you say we sell it at a loss? What does it mean before we talk about entries, those entries? Entries in relation to disposal. So when you sell at a loss, what does it mean? A disposal loss. What would that mean?
The item is sold at a price lower than its expected value.
Expected value, meaning at the time of selling, are we together? If you look at the net book value, you sell less than the net book value. What about profit?
This is where an asset is sold above its net book value.
Yes, above the net book value at the time that you're selling. So double entries, we can talk about those double entries. So one, we can talk about with the cost of disposed, what you call disposed assets. That at the beginning. So with the cost of disposed asset. So what do you do? What are the double entries? At cost, what do you do? What is the first thing that you do when you're disposing asset? You'll open what you call a disposal account. So you debit the disposal account, and then in which account are you going to credit? Remember at cost, which account are you crediting when you dispose an asset? You're going to do what?
The particular asset in question.
Yes, asset account. We are going to credit asset account. Why are we crediting asset account? Because you're doing away with the asset. Remember, reduction in asset we credit altogether. So then we can go to the next entry. We have the second. You can have it here.
I have a question.
Yes.
That disposal account, under which ledger is it being created? Sorry,
Under-
like which ledger is it affect? Is it like an expense, an income, or?
No, you create what you call a disposal account for the sake of doing away with the asset. It's not expense or ledger, but you're going to create an account called disposal account. Are we together?
I'm asking where the disposal account falls under.
No,
It is a real
you're
account.
saying, I've said, for example, the purpose of that disposal account is to facilitate doing away with the assets. It's neither falling on the assets or what? It's neither falling on the asset or expense altogether. The essence of it is to determine whether, we are making a disposal gain or a loss, because the balancing figure, remember the balancing figure. There's noise on your side.
Excuse me.
Hello?
Oh, kindly for my help.
Somebody is making noise on the other end.
I think from my understanding, Madam Jane is like asking where that account falls, be it real account, nominal account, or personal account. Yeah,
So where does it fall in terms of?
I think real account.
Yeah, those should be real account. But what is the essence of the disposal account? Why do you think we create it? Why would we create it? The essence of it.
To do away with the
asset, and basically to determine what to call, either we're making a disposal gain or a disposal loss. Are we together? That is the essence.
What I wanted to ask is,
yes.
do you see the way depreciation is an expense?
Yes.
So I needed to know disposal account is what? Is it affecting the balance sheet or the income statement? That is what I was asking.
It's going to affect the income statement, because the disposal gain, that's an income in the income statement or the P&L. Disposal loss is an expense. So, Jane, is that okay?
Okay.
Yes, that is what.
Yes.
So then the second we say, with the cost, that is B with the cost of purchased, with the cost of purchased asset. So when that asset now is, you see, when we are opening disposal account in order to sell it, we open that account. When you purchase it, what happens? When that asset is purchased?
We recognize the asset.
We recognize the asset. Are we together? So what do we debit?
The asset.
We debit the asset account. And what happens? What do we credit? When an asset is purchased, with the cost of purchase, when you purchase, not this is basically that when you purchase an asset, what happens? We recognize asset account, and what happens? What are we losing when we purchase an asset? Those type of entry.
Cash.
Cash or bank. We credit cash to bank altogether. 291 altogether. So when you purchase an asset, we recognize the asset, we debit the asset account. But remember, the money came out from either the cash of the bank or the bank altogether. Then we have what you call with accumulated, what you call with accumulated depreciation of disposed asset. Accumulated depreciation of the disposed asset. What are we going to do with that accumulated depreciation of the disposed asset? Where do we take it? Accumulated depreciation of the disposed asset. That touches on what? Disposal account and what? Accumulated depreciation or provision for depreciation altogether. Remember, are we here? Remember, when we opened the disposal account, we gave the value at cost altogether. So when we have the accumulated depreciation for the disposed asset, what does it do to the disposal account? What does it do to the disposal account? What does it do to the disposal account? With accumulated depreciation, what happens? Somebody was saying something. So number one, we know that two accounts are affected now. We have the disposal account, and we have provision stock accumulated, what you call accumulated depreciation account. So what does accumulated depreciation for the disposal asset does to the value of the asset in the disposal account? What does it do? Who can try? What does it do? Remember, when you're recognizing, first of all, the cost of this, we recognize at cost altogether. So meaning we do what? We debit the disposal account. But now with the accumulated depreciation, what will happen to the disposal account? What will it do to the disposal account? Who can do that?
You debit accumulated depreciation and credit disposal account.
We do what? We debit.
You debit
provision.
accumulated depreciation.
Stock accumulated depreciation account. Accumulated depreciation account. Then what do we credit? What do we credit? We credit the disposal account. Disposal account. Are we together? So when you credit the disposal account, what value are we going to have? What value are we going to have? What value are we going to have when you credit that? Essentially, we're going to have the value of asset at the time of the disposal together. We are going to have the value of the asset at the time of disposal. Then we have the next entry. When you talk about charge for the year, that is depreciation for the year. With the charge, what double entries does it with the charge for the year? Charge for the year, that should be what's called depreciation for the year. What are the double entries for this? Double entries for this. With the charge for the year, which we know that is depreciation for the year. What do you do with it? Charge for the year, depreciation for the year. What are the double entries for that? We know that depreciation is an expense. So what do we debit? and what do we credit?
Disposal account.
What do we debit and what do we credit? If it's an expense, we debit what you call income statement. Why do you debit income statement? Because that's an expense. And then we credit what? What do we credit?
Balance sheet.
Yes, that is the balance sheet, which is provision for depreciation. We'll have provision. Remember, provision, you're going to less in the balance sheet. Provision for depreciation. That is the entry that have provision for depreciation. That is basically provision for depreciation. Then E, with loss, when you talk about with loss, realized. When you talk about with loss, realized, we say that with loss realized on disposal. With loss realized on disposal. What happens to the loss realized on disposal? Let's say you open a disposal account. We say asset, we add the asset, we say we debit what? Disposal account. We had the disposal account, are we together? We had what? We had the asset, let's say machinery. Are we together? Machinery. Maybe 10,000, we can call it 10,000. Then we have down here accumulated. We create accumulated deep. Are we together? Maybe 1, 5. Are we together? Based on this entry together. When you pay, what happens? When cash is received, because you're selling it, when you sell it together, what is going to happen? You're going to debit bank and you come on and also credit what? Credit, you're going to debit bank or cash altogether, depending on how you've disposed. Maybe you've disposed it in cash or you've disposed it through bank, meaning that you're going to debit bank and you credit disposal account. Maybe you dispose this at a cash of what? We call it cash to bank, with the value of 7,000. 7,000. What is the implication of that? What are we going to have? We have accumulated depreciation for that asset that we're disposing, and then we have cash or bank. What is the balancing figure in this scenario? The balancing figure will be, so we have the balancing figure is 10,000. That is the higher. So it implies that the balancing figure, what is that balancing figure? You're not able to see that. Let me wrap this. We're saying that this is the disposal account. This is the disposal account. We say that machinery, on that machinery, we have that machinery, 10,000. Then we also had accumulated deep of 1.5. Then we receive a cash to bank of 7,000. So the balancing figure in this side, we have the balancing figure in this side is the debit side, which is 10,000. So what is the balancing figure? What would that balancing figure signal? What is that balancing figure basically signaling?
Income.
Is it a disposal gain or loss?
Gain.
Is it a gain or a loss? Is
Gain.
that a disposal gain or loss? What is that? Somebody, Musa. Musa, are you there?
Yes.
Paris. Musa, is that a disposal loss or gain?
I think that's gain.
Why is it a gain? Look at this. This is the accumulated depreciation. This is the value of the asset. Meaning that if you're to sell that asset, the net book value at the time that you're selling should be 10. Are we together, Musa? That should be 10.
Yes.
Minus 1,500. To imply that at the time that you are selling the asset, the net book value should be 8,500 and you've sold it at 7. So that should be a disposal loss. Down here
Disposal loss.
This should be a
Disposal
disposal loss. Of how much?
Sorry.
That should be a disposal loss of what?
2,000.
Not 2,000. 2,000 is on the higher side. That is 1,500.
One.
1,500. Tuko sawa?
Yes.
So how do we recognize this using double entry when we make a disposal loss? How do we recognize that? Remember, disposal loss is an expense. Jen, are you there, Jen? Jane,
Yes.
are you there? So
Yes.
we basically say that disposal loss is an expense. When you get a disposal loss, you will go to what? You'll go to the income statement and less it as an expense. When you get a disposal gain, you're going to go to the income statement and add it as an income.
As an income.
So basically, what will the double entry? The double entry will be we debit income statement, because the disposal loss is an expense. That is basically an expense. Are we together? That is an expense. Then we are going to credit what? Look up. We are going to credit what? Look at the value. We're going to credit what? Disposal account. Are you seeing disposal account? Are you seeing the figure? So the double entry here, we are debiting the income statement and we're crediting the disposal account. What about with disposal gain? With profit realized on disposal? When you have profits realized on disposal, what is the double entry? Profits realized on disposal. Profits realized on the disposal. What now happens? So let's say, for example, look up this.
Question, a moment.
Yes, you can ask a question.
This part that you have just done, yes, your debiting income statement, which is an expense, and disposable account, which you said earlier is, so you're debiting two expense accounts.
I've not said
You're
disposal is
debiting
an
and
expense.
crediting two expense.
Look up. The essence of opening a disposal account is to determine whether we make a disposal gain or a loss. I've not said disposal is an expense account. It's an expense account. Are we together? Tuko pamoja.
Yes.
No,
I've said your name, please. You have not gotten me. I've said that the essence, whenever we dispose an asset, we open a disposal account. And the end goal with the disposal account is to determine whether we've made a profit on that disposal or we've made a loss on that disposal. If we make a disposal loss, then that is an expense that we take to the income statement, to the income statement altogether. And if we make a gain, that is a profit or an income that we take to the income statement. Have you gotten me?
yes, yes.
Yes, that is the essence of it altogether. So we're saying when we make a disposal gain, we've sold this value at a value higher than the net value. Let's say, for example, cash now. We have cash here. You see, when I'm putting this, when I put cash to bank here, if I'm crediting, it means that in the bank, I should be debiting disposal altogether. So cash or bank, let's say, for example, we sold at 10,500. Are we together? So I want Musa to see something altogether. Musa, now what is happening here? What is the balancing figure in this case? The balancing figure in this case should be 12,000. Up and ngapi for the up and 12,000. So what is the balancing figure? The disposal gain should be a debt. So we have what you call disposal. This is the income statement, but that is the gain. Again, altogether. Income statement, statement, and we know that this is the disposal gain. Are we together? Of how much? That should be 2,000. So what should be the double entry when we realize a gain? What should be the double entry now when we realize the gain?
We debit the disposal.
We debit disposal account. We debit disposal account. We have the disposal account to marijuana. And then we credit what? Income statement. So when you credit income statement, it means that we have received an income. Si tunaelewana? we've received an income. That's why we credit income statement. If we debit income statement, we represent what? An expense. So then the entry again, the next entry, and we've discussed that entry with sales proceed from disposal. When we receive with sales proceeds, with sales proceeds from disposal. So what happens with sales proceeds from disposal? Umepata pesa as a result of disposing an asset. What do you debit? And what do you credit? Already we have it because we are receiving money. So an asset, bank, or cash is being debited. See, that's true. Sales proceed from the disposal. What? Are you getting me? So we go to debit cash, stock bank account. And what are we crediting? Remember, where is it coming from? Disposal. So we credit. Look at bank. What do we always do? We credit disposal account. Disposal account. We basically credit the disposal account.
Kindly, excuse me, sir.
Thank-
Kindly, yes.
Kindly?
Or if I may ask,
Yes.
okay, if we sell an asset,
Mm.
where do we take that cash? Do we deposit
So we take it to the bank or we have a cash account. When you
Do we
receive,
add
if
it
you're
to the
business, are we
with the
together?
cost?
You're saying?
Do we sum that cash to the cost of that the original cost of the item of the asset, or how do we treat it?
When you say asset, remember this is disposal. This is not we are doing away with the asset. So the asset is no longer there together. So first of all, when you receive a cash, we can either receive a cash through what? Through bank or cash account. Cash account. That is number one altogether. But because we are
Yes.
disposing, the assets, what we're doing is that we credit that amount in the disposal account to help us determine whether we are making a profit or we are making a loss. Sawa. Is that
Understood.
okay? Who is that? Understood. That is a double entry. There's something on I want us to talk about something on PPE schedule. PPE schedule. PPE schedule. I'll give you this format. What is the PPE schedule? When you say PPE schedule? What is the PPE schedule when you talk about PPE schedule? When you talk about PPE schedule, what do we mean by PPE schedule? What do we mean by PPE schedule? When you say PPE schedule, what do you mean by PPE schedule? What do you mean by PPE schedule? What do we mean by PPE schedule? What do we mean by the PPE schedule?
This is systematic
Who
way
can
of
try?
arranging.
Mm.
Okay. This is a systematic way of arranging.
I'm losing your systematic way of arranging. I've lost you. This is basically a summary. We call it a summary. Summary of the report. What we call a summary of the report. Summary report on the balances. On the balances and transactions of assets and provision, what you call provision and provision for depreciation and provision for depreciation account as per the IAS 16 to be reported in publicized accounting altogether. So basically on a PPE schedule, a number of times altogether, you'll get the cost of assets. You'll have items on assets that are bought for the year. You'll have revaluation, reports on revaluation, assets that were reclassified. You'll also have a summary of accumulated depreciation. You'll also have the charge for the year. So the essence of it altogether, you'll be able to get the net book value. You'll be able to get the net book value as at the end of the year. So I'm saying that in the PPE schedule, you'll get the cost of assets at the beginning of the year. You'll get the assets that have been bought for the year. You'll have a summary of the disposal, assets that have been disposed during the year. You'll also have revaluation, assets that have either been revalued upward or assets that have been revalued downwards altogether. On the PPE schedule, you'll also have the depreciation for the years, and you'll also have at the same time the accumulated depreciations that are brought down. So in essence, when you have the PPE schedule, you are able to determine, you are able to have that summary that you'll be able to know the net book value of an asset as at the end of the year. So on top here, we have the cost that are brought down. There's addition. There is what you call revaluation. We have reclassification. And then we have disposal. And then we have disposal. These are revaluation gains altogether. So this will give it value, the cost altogether. Then down here we have charge for the year, which have as charge for the accumulated depreciation, accumulated dip. You have charge for the year, charge for the year. We have charge for the year. We have revaluation loss, revaluation loss. Then we have eliminated on disposal, So you get these values. You get net book value as at 31st. You get this value net book as at 31st. So these ones, you less what you have down. So then you have the net book value of an asset. Are you able to see that in your in the handout that I gave? Are you able to see that in the handout that I gave? Are you able to see that in the handout that I gave? Are you able to see that on the notes that I gave? Are you able to see that? PPE schedule, property, plant, and equipment schedules. Are you able to see that? You respond if you're able to see that. Are you able to see that?
Yeah, confirming.
You're not? There's a summary there, just a summary of the PPE schedule. I want you just to have it as a summary. And that summary, I think those are the things that I would do at last. If we do that PPE schedule, we may a little bit not cover on crucial areas. So tomorrow, I'll do something on prepayments. Prepayment. How do you treat prepayments? I'll discuss that tomorrow. I'll discuss accruals, accrued, prepaid income and expense. I'll talk about that. And expenses, accrued income and expenses, accrued income and expenses. And I'll talk about bad and doubtful debt, Then I will start with the sole trader. I think for the first hour, we can discuss this. The PPE schedule, I want you to hold. Once you have that, look at the format. Just look at the format. These are the last things that we'll do. on the PPE schedule. But I'll discuss prepaid income and expenses. I'll discuss accrued income and how we treat them, because you need this for you to do the sole trader and that is bad and doubtful debt. How we treat it, then you start on the sole trader. Sawa. So do for me a research on accrued income and expenses, accrued income and expenses. Then we have bad and doubtful debt and how we treat them. Is that okay? As we wrap up there. Is that okay? Is that okay?
Yes, I have a
Yes.
question.
Sure, you can
The,
proceed.
the double entries that you have learned for asset disposal. So these entries are what we are supposed to record depending on what happened on that asset when it was being
Yes,
disposed.
depending on what happens on that asset. You know, sometimes you have a
Okay.
P&L. Let's say, for example, you have a question on sole trader. Are we together?
Yes.
Do you get me? The
Yes.
journals have not been made. You need to do the ledgers in order for you to get whether the examiner has not told you that there's a disposal gain. So you need to find it altogether. So you will open those accounts in your quest to find it altogether. Sometimes you have a question on P&L. You don't have the capital, but then why it's very important, you don't have the capital, you don't have the capital, but you have initial assets and you have initial liability. So you need to understand that concept altogether. Sometimes you're looking for cash at the end. You had a cash at the beginning and there were payments that were made. So as at the end of the year, you need to do the ledgers in order to get cash at the end of the year. What will help you? It is the ledgers that we have opened. Sawa.
Yes. Okay.
Yeah, like when you dispose, you're going to increase your cash altogether. So meaning that if you had a cash, you need to adjust that cash that you've received as a result of what? As a result of disposal of an asset. But basically, these were basics. These are just basics. When you talk about how to calculate deposition, maybe if you're doing ATD2, not even ATD2, maybe if you're doing ATD1, that such questions will come on deposition. But now at the level of CPA, and maybe at the level of CPA, you'll not find such a question. What will come is that you find those analyses in a question. Like when you're doing the sole trader, you'll now see the concept of straight line method, how to apply to get deposition. You can use the what you call reducing balance to get deposition altogether. So I want us to talk about this because once we talk about this, we'll start on the sole trader, then we go to the partnership, then you come back to the companies. We're together. But once we've done this, that will help us to do that altogether. Maybe partnership a few adjustment. Sawa. Is that okay? So I think
Yes.
we can close it there. So tomorrow the first thing that we're doing is how do you treat prepaid income and expense? How do you treat accrued income and expense? Bad and doubtful debt, how do you treat them? Then we just start on the sole trader. I think that we should end at that point. I just want to say thank you for showing up today. Looking forward to see you tomorrow. God bless all of us. God bless all of us. So we can leave. Asante, amen too.